Okay, so recently Jim Cramer from CNBC has made his top 4 picks for 2022 stocks, some of which I agree and also that I disagree with. Let's get down, let's check it out really quickly. Remember to do your own research. Never trust some random person on the internet or even Jim Cramer himself. Some people really love him while other people hate him, and there's good reason for it. So let's get down, let's check it out. His first pick is Chevron, which is no surprise. Actually, all of these picks are really no surprise because, of course, all of the picks that he picks are always from his own hedge fund that he runs. So, that is a huge reason why I say always do your own research. Don't just trust people on the internet or even on the TV because sometimes they have ulterior motives. However, Chevron, I actually kind of agree with. It's actually a pretty good stock, especially if you're like myself and you love dividends. This does pay a 4.3% dividend. When it comes to the PE ratio for oil companies, it's kind of on the middle ground, maybe on the bit higher end when it comes to PE ratios, so it's not exactly on sale by any means. And the average volume is absolutely crazy, so you're able to get in and out of it pretty easily, unless you're buying like 5 million shares, in which case, why would you be watching this video? Now, this is when it kind of gets interesting because I really like to look at charts, and as we can see, it didn't have all that bad of a chart before, of course, the virus. Everything plummeted. This was when oil went negative for the first time ever, and everyone thought the world was going to burn. However, of course, it's recovered quite nicely since, and it's actually pretty well in line with its long-time chart, and it's not back to its all-time high, and I'm not too sure if it will get there anytime soon. However, there's reasons for and against this stock. A major reason against this stock is this right here. It's starting to cross. The MACD is starting to cross, and if that green line goes above the blue, well, guess what? This stock is going to be going down. Could we see a little bit of a reversal? I personally think that there could be, at least in the short term. I think the MACD might get back down to baseline, at least what I call the baseline, which is 0. And at that point, I'm not too sure how far this may drop. It may go back down to previous support levels there, or potentially there. It's hard to say, but I do believe that there is going to be some downward pressure, potentially just because of the MACD. However, that could be totally against what will happen because right now, because the Fed is in the States starting to essentially not spend so much money when it comes to stock purchases as well as bond purchases and things like that, there is a lot of investors who are starting to move towards safer stocks. And what is that? A stock that pays a stable dividend and, of course, a company that's like a blue chip company that's been around forever. And if that transition continues to happen, Canadian banks, American banks, oil stocks like Chevron are going to be going through the roof. However, if this taper doesn't happen all that much or as fast as what people may think, then tech stocks might be a better solution. However, right now, it definitely does look like blue chip dividend type stocks are going to be at least this year's favorite. They do also very frequently up their dividend. They just recently upped their dividend by 5 cents a few months ago, actually almost a year ago. So we may see another increase in dividend coming soon, but it's always hard to tell. The only thing that I really see that's huge against it for the long term is, of course, the dropping revenue since 2018. Anytime a revenue is dropping, it's a cause for concern to me. However, this could turn back around with Biden in office. When Trump was in office, oil prices were going down. He was very good with opening up different oil fields. And of course, Biden wants to shut all of those down. Whether you agree with it or not, it doesn't matter. I'm not here to debate who's right. However, I am here to say that with Biden in office, oil is going to get higher and higher and higher, which means that Chevron's stock price could potentially also get higher because they'll have higher revenues going into the future. And over the past 4 quarters, they've met one expectation, missed one, and beat the last 2, and the last one being the most substantial beat yet for the past year. Eli Lilly, LLY, is another one of Cramer's picks. As a dividend investor, it's only 1.5%. The stock's been around for a heck of a long time and has really good volume. And when it comes to the PE ratio, at least versus other stocks in its field, it seems to be pretty well in line. It's not on sale. It's also not expensive. It's kind of in the middle. And you can't deny the 5-year chart looks absolutely amazing. And when we look at 2019, 2020, during that initial phase of everything going down, it really didn't have anything to do with going down. And it's rose hugely since. Also, the fact that it looks like the MACD just potentially crossed could lead the stock even higher. They also do raise their dividend quite a bit as well, and usually companies that raise their dividend are considered safe investments, and considering the big move into these types of stocks versus tech stocks, Bitcoin, things like that, we are really starting to see that this could be a potential big gainer into the future for us. We can also see that they have higher revenues and generally higher earnings, minus 2020. I really don't want to compare 2020 all that much, but they did have higher revenue and lower earnings, which is kind of interesting. Honeywell is another one of Jim Cramer's picks, HON. Now this one again is not a massive dividend payer. It's only 1.8% and it has about 2.7 million volume shares traded per day. And the PE ratio again is pretty well on average for its field. Over the past 5 years, it's had a pretty good run. Of course, 2019, 2020, that was kind of an interesting drop. It did drop down really far down when you're looking at levels of support all the way. However, it has really recovered. The one thing that you generally don't want to look for is a rounding of a top, and that's what we do see here with Honeywell, and I would be kind of scared of it at that point. Another thing that I would be definitely scared of is, of course, the MACD. Right now, it doesn't look all that good. The blue line's been pretty well steady for a while underneath the green line. You don't usually want to see that, and we don't really see any bit of turnaround anytime soon. It's also dropped below 0, and anytime it drops, the MACD drops below 0, that's a cause for concern for even more drop. So it's going to be quite interesting. Now, we did see a 2.34% stock price gain the last trading session before the little bit of a drop after hours. So always do your own research. This is just my own quick research into stocks that Jim Cramer is really trying to push. However, there are a few issues that I do personally see, being the rounded top and the MACD not showing too much of a positive. They have been raising their dividend, which is a positive considering the type of stock market that we see ourselves in right now. However, when we look at the financials and the earnings, again, kind of interesting. We're seeing that they're beating quarterly estimates. However, since 2018, 2019, 2020, they've been dropping their revenue and their earnings have also been dropping as well. So this is personally not a stock I would be getting into at this point in time. I would like to see at least that change if I was looking for a long-term investment. And Bausch Health Companies, I probably butchered that name. Good volume again. This one does not pay a dividend. It hasn't paid a dividend since 2010. So this is definitely something that I would be personally staying away from unless there was some big stock gains potentials. It is up during the market and after hours of Friday's last trading day. We don't really see it moving away from zero MACD until, of course, recently here as well as here. So again, this is a concerning stock that I would personally not be putting my hard-worked money into. And this is what I mean. It hasn't paid a dividend since 2010. It also has negative earnings. It's kind of concerning as to why Jim Cramer may have recommended this stock. Maybe he thinks that they're going to be making positive earnings once again. It's going to be quite interesting. If they do start making positive earnings, it would be an interesting stock to get into. But at the same time, I like to go off the past history of a company. And considering this company I don't know a ton about, or the fact that they're just not making money, makes me concerned. And it is something to probably stay away from, in my opinion. While some of these stocks are really good, others are not. I hope that you've enjoyed today's breakdown. If you have, hit that like button, subscribe. Let me know your thoughts down in the comment section below, and I'll see you guys again next time.